Good afternoon, everyone, and welcome to Stock Market Today by Investors Business Daily. It's May 20th. It's a Friday, 2022, and man, what do we have in store for you today? It's Justin Nielsen here along with Ed Carson while Ali Corum is on vacation. And we're going to walk you through the day today, interesting day again, and also kind of recap the week for you. So we'll cover Eli Lilly, ZIM Integrated Shipping, two of the bright spots in today's market, and then also Tesla, which was looking a little bit rough on the downside, putting 700 possibly in its rearview mirror. So we'll take a look at that. And first, let's start with the major indexes. And man, Ed, I don't envy you. You had to change headlines, basically midstream as you were writing them. Are we going to close? Are we going to close lower? Are we going to close flat? What's the deal? S&P 500 basically flat for the day after being down pretty significantly. It was down as much as 2.3% intraday. Nasdaq Composite, it was down a little bit, like 0.3%, but that was down over 3%, 3.1%. Earlier in the day. Dow Jones also closed flat. Russell 2000 down just a smidge, 0.2%. So, gosh, what do we do now, Ed?
Yeah, well, all the major indexes, let's just go through the week and we can talk a little bit about Friday because the rally is dead. Long live the rally attempt, oddly enough. But we started off the week okay.
And long live the new rally, right?
Yeah, exactly. We started off Monday, with just sort of a modest down day. Okay, fine. And not that important one way or the other. But then continuing on the rally attempt from the May 12th lows. But then on Tuesday, we staged a follow through. Now, on all the major indexes. Now, it wasn't the most impressive rally. It was barely over the 10-day line. Still well below a lot of moving averages. The volume was below average. It was higher than the prior session. So it met all the criteria by every measure that this was clearly a follow-through day on the NASDAQ, Dow, and S&P. Had a lot of caveats, and then Wednesday was clearly an expectation breaker.
Yeah, and I guess the good news is that when it fails that quickly, it doesn't give you as much temptation to be piling into stocks. What can happen a lot of times is you get the follow through day. A lot of things are setting up. You're like, oh man, I can't wait to make money again. You get over eager, you buy too much, or as it continues going up, you just keep on buying more and more and more. And then you get the failure. And that's where it can be a little bit tougher to unwind. I feel like this time, at least it kind of told you pretty quickly, hey, this isn't, I'm not really open for business right now. Don't even wait in line at this point.
Yeah, and in late March, there was a strong bear market rally. And so, yeah, got a lot of people in that. And yeah, you're right. On this rally, right away selling off. And when you close below the follow through, below the lows of the follow through day, it doesn't have to happen right away. It can happen like a week later, 2 weeks later. But once you close below the lows of the follow through day, which was Tuesday, that is, the research shows that 90% of the time that rally ultimately fails. And this didn't just undercut by a smidge. There was decisive breaks on Wednesday. It was very clear this was an ugly reaction. Even that day, the S&P and Dow actually had new closing lows that day for like 52-week lows. So just everything was looking ugly. On Thursday, the Dow Jones undercut its lows, its rally attempt failed. And then today, the S&P and NASDAQ undercut. There was a rally back. Technically, that ends the rally. Technically, the NASDAQ, what we would call a pink rally day. So this could be the beginning of a new rally attempt. The S&P and Dow actually rose slightly by the end of the day. I know it's not going to show it here. That's how furious the reaction was.
Right.
Is that we're still trying to catch up
with the delay.
This is only 10 minutes before the close, and we were down this much, and we ended up higher. So it'll be positive. But you can see we're well down here. For most of the day, the S&P was in a bear market. We were down more than 20% below. So while there is technically now a new rally attempt on these major indexes, I think investors need to be very cautious going forward. Obviously, you have to wait for a lot more than this. And we can talk about that more near the end, but definitely this is not a strong market. And actually, I'm going to just go through a few things. Let's go through the weekly because it's very clear this is a sharp downtrend. And yeah, the losses might be paired a little bit, but there's no rally here. This is almost vertical down for several weeks now.
Right. Now that begs the question, when you start getting the vertical down and a lot of people start thinking, well, this has got to be the low, right? You can't have that many weeks going down in a row. That's very unusual. Is that kind of capitulation? Is that once things look the bleakest, it's always darkest before dawn. All of those things come into mind when you look at what's going on in the indexes. So does that make it more likely that this could be the bottom? Of course,
I
that's
mean,
something a lot of people have said before, right?
that's what we could said it a number of times. And you say like it's always darkest before the dawn, but it's pretty dark at 2 o'clock in the morning. You know what I mean? It's like, and then it's dark for a few more hours, especially winter is coming. And that's what
Yeah.
we have. I know it's getting close to summer, but for the stock market, it's winter. I mean, so it's pretty dark at 2 in the morning. And so it may be quite a while before we get there.
Yeah. And you
It's,
know what it reminds me of, to a degree, if we just quickly take a look at 2011 and maybe go to December of 2011, for instance, or maybe even
and
January of
what index would you
2012.
like?
Let's go ahead and look at the Nasdaq. And it just reminded me because internally we were having a discussion, and it was like, okay, S&P 500, enters bear market territory, which means it's off 20% from its highs, and then Ed
Sorry.
shortly after that was like, oh, I guess the bear market's over. We're no longer down 20%, jokingly.
Hmm.
But if you look at, what happened here in 2011, we had all these global recession fears. And there were a number of times where the NASDAQ had finally hit that 20% magic level, right?
Yeah.
In this case, it happened in like 5 minutes where it hit it. And then 5 minutes later, there was that massive rally. A very big spread, widespread, where it closed, tremendously off its lows. It was actually up considerably, but you still had a lot of this choppiness back and forth. The market still needed time. It really wasn't until December, the end of December, that you really started getting traction in stocks. So I feel like, again, this could be the lows, but I don't know that we necessarily go up straight away.
Yeah, I mean, we could definitely, there's not a lot of stocks that are in position. We'll look at some stocks that are doing all right, but there's not too many. And when you go down vertical, it's very hard to get even the stocks that are holding up. There's not going to be too many good looking bases in that environment.
Right.
I mean,
Mm-hmm.
it's just like anything, it just might, a lot of them might be just falling less or they're all choppy. There are some areas, oddly enough, that are holding up that did not bottom. I mean, that is Scott St. Clair, head of premium products and MarketSmith. He was pointing out that the small caps didn't undercut. I mean, we don't. It's just some kind of non-confirmation there.
Mm-hmm.
I suppose that's
Now, this was the
something.
lagging index for
Yes.
quite a while. This one topped well before. This was kind of the canary in the coal mine, if you will. It topped very, much earlier. It was lagging for a long time. You see that relative strength line versus the S&P 500, but I think it was a great point. Scott St. Clair, of course, is a frequent contributor on IBD Live, so not only can you see him on the Fridays where he does kind of his own MarketSmith recap, he also is on Mondays generally on IBD Live. But yeah, go ahead, Ed.
Yeah, and it's just something to note. I mean, I don't want to make it. And what's curious is that even at the worst levels today, now you normally see ARC will have big moves up and big
Mm-hmm.
moves down, but oddly enough, ARC has been trading for what is ARC relatively tightly, and this
Yeah.
even includes now Tesla technically is no longer the biggest holding in ARC anymore, RK, but that's still a big holding, and this was coming down sharply, and yet it held well above the lows. So some of the areas that have been the biggest laggards weren't. Now I don't know if that's just bottom fishing. I mean, we've seen plenty of stocks and sectors that have held up really well and then they crash. So just because they've held up for a few days here doesn't mean too much, but I guess we'll just, just something to keep in mind. I guess maybe the software names in here aren't as exposed to supply chains and inflation and recession fears quite the way, maybe a hardware company or a retailer might be, but it's not like ARC has been a good investment over the past year.
Right. And, to that point, a lot of these, there have been so many times where it's like, oh, well, it can't get any lower. It can't get any lower. But certainly you had a lot of volatility in these names. I mean, we were just looking at Shopify not too long ago in that March rally where it had like a 40% gain in a matter of days. But then, once it turned over, it failed spectacularly. And before long, you were down making new lows, where again, a lot of people were probably looking at that and saying, "This is still a good company. How can it go any lower than this?" Especially when something's down 75% from its high, you figure, well, gosh, how much lower can it go? And the answer is, well, from any place that you buy it, it can always go down 100% from where you bought it.
And in a bad market, that's when the best days in market history are. And when you're looking at, say, growth stocks like the hyper growth stocks, those tend to have the biggest swings. But
Mm-hmm.
in the bear market, they'll tend to reverse lower. So that's just always a risk. Don't get just in general, don't get sucked in by 1 hour, 1 day, or even a few days. Really want to see a real uptrend before getting excited about stocks.
Mm-hmm. Now, maybe just a little bit more of that broader perspective. One of the things we've been watching is, of course, the 10-year Treasury yield. What are your thoughts on that, given what's going on in the market? We talked yesterday about how the 3% was certainly a lot of wringing of hands at that point. Oh my goodness, but now that's pulled back quite a bit.
Yeah, and that may be one reason why I'll say the ARKK is doing a little better too. But in general, I would say this is not really a positive sign. If this were like inflation readings are coming way down, the Fed's going to stop raising rates and yields fall or something, then that would be a different story. But this is because there's increasingly a concern that we're going to have a hard landing. I think that's something that's really gripping the market, is that whether you let inflation run wild or the Fed really tries to squash it, either scenario, it's sort of, trying to suffocate the economy or let the fire go burning. Neither scenario is very positive for the economy or for the stock market. So yeah, this coming down because you're starting to fear recession, that's not like, oh wow, I bet stocks are going to do great. I mean, costs are rising, demand is falling. That's a nightmare scenario for companies. How are you supposed to make money? How's the margins on that? It's really gripped a lot of sectors in this market this past couple of weeks.
Okay, so speaking of sectors, maybe you could do a little bit of a run through of some of the sectors that were kind of representing what was happening in this market. Certainly, one that we keep on talking about is XLE, which represents the energy sector. Of course, this is dominated by ExxonMobil and Chevron, XOM and CVX. That makes up about 40% of this ETF. What are your thoughts? This has been one of the standouts in terms of a market that's going down, and this one looks like, hey, what correction?
Yeah, this is still going up. I mean, even if energy demand goes down, it's still so much higher than supply. It doesn't seem like prices are really going to get hit that hard, unlike some other commodities, perhaps. But yeah, this is still doing very well. Not all energy stocks, or even not even all oil and gas stocks, are holding up as well. But definitely, this is the one area where that is still holding up reasonably well, and still could be buying opportunities down the road.
Mm-hmm. Now, with all of this talk of inflation and recession, you would think that gold would be top of mind for a lot of people. What about that area? We've talked about GLD, which is a representation of the spot price of gold. It had a little bit of a rally yesterday, and it just still looks like there's work to be done there.
Yeah, I mean, this is you're making a bet about the economy, about inflation, about growth. The dollar was very strong, and when the dollar is strong, I mean, a lot of things go down, like rising yields and a stronger dollar. People were shifting back into that instead of, still, that's not in a good environment for gold. It wasn't a safe haven. People were saying, "I'll put money into treasuries. I'll put money into that, or put in the U.S. dollar." But so that has a lot of work to do. I think another area that's doing reasonably well, though, is XLV.
Right. A lot of the healthcare stocks. Mm-hmm.
I mean, but that has come off as well. So it's not like this would have been a safe haven for you over the last month. This week, it did reasonably well. It didn't hit new lows. The RS line is hitting new highs, but that's not great. And of course, the real disaster area was XRT. That is where that was the epicenter for the market meltdown this week.
Right.
Wasn't much of a bounce to that was Walmart, that was Target, that was Ross Stores, and a whole lot of other retailers that sold off as well in reaction to those names.
It was almost like you weren't a real company, retail company, unless you were down 25% this week at
Oh my
some point.
goodness.
Yeah.
Yeah, I'm surprised it's not down more. That the index isn't down more.
Uh-huh.
But
Yeah.
it was definitely that kind of week.
Yeah. Okay, let's go ahead and get to some stocks. And starting with Eli Lilly, ticker symbol LLY. You mentioned healthcare. This is certainly one of the stocks that have stood out. We've talked about Merck, Eli Lilly, Bristol Myers, but Eli Lilly, I mean, this just looks like it's hugging that 50-day moving average line.
Yeah. And, I tried to have an early entry here on Monday. Certainly could have tried to play that, sort of breaking a trend line. They had a diabetes drug get approval that people see as also that's supposedly really advanced and that maybe it could work as an obesity drug. So a lot of excitement there. It's defensive growth, so it does well in a bad market, is the idea. A lot of drug makers are doing well. It did come down, but as you say, ultimately it hugged that level. I mean, I understand that this would have been tough. I didn't get into this, but I probably would have sold out on Thursday. It's like, okay, everything's going, or
Yeah,
certainly would have
especially
scaled.
when everything's going down.
Everything's going down,
Yeah.
but it did bounce back. I think there was some positive there was positive news about another drug that looks like it's going to get approval in Europe. But in any case, drug stocks did well today. I don't think you'd necessarily want to be doing anything with it right now, but definitely want to be watching it closely. Definitely a leader in this market.
Yeah, and we have Merck on Swing Trader, and one of our concerns with the follow-through day was, hey, are we going to get some sector rotation? Are some of these defensive areas going to now fall out of favor if we get a rally? But again, the rally didn't last, and so Merck is still looking fine as well. That's ticker symbol MRK. Let's go ahead and switch over a little bit to shipping. ZIM Integrated Shipping. This is one that we mention a lot. It's got this tremendous yield. It does these special dividends. So the yield that it shows up at as 46%. They basically are returning almost everything to shareholders. So this is another one that, I mean, it certainly had a pretty dramatic drop, but here we are, relative strength line back at new highs before the price.
Yeah, so nice action here, and it actually fell on earnings. Not exactly sure, but I think it was just a reflection of the market rather than disappointment with the earnings. But now it might form a little handle. I mean, it's not on. I'm not sure if a cup base will reappear here. It may have been a little too low, but I think this would be just high enough to be a proper handle if there's one more day. So nice action here with the dividend that it pays out. That's something that you can go steady. If this is actually a stock, if it goes flat and you get a 46% return, that's a huge gain. But definitely one to be watching here. Really impressive growth in this field. There's a number of other companies in this field that also had strong earnings as well.
Yeah, and just in case people are looking at maybe a charting service from a different provider, you see where those distributions happen, those dividends happen, and we make adjustments, especially when they're that large, because we don't want to show this big gap on the chart and make the chart look funny, like it got destroyed by some piece of news, when in fact it was just returning money to shareholders. So just something to note there. And you can see each one of those distributions appear on the chart. You can also see that on the weekly chart going back a ways. Let's go ahead and round this out. Those are two stocks showing strength, but Tesla, this is the bellwether, and it's looking like it's putting 700 possibly in the rearview mirror.
Yeah, unlike the prior two times when it really sold off, a number of these times it came down, but saw these strong rallies. Now it's partly because the market ended up having strong rallies, and the market did rally back today. Maybe somebody just forgot to tell Tesla quite in time because it didn't rebound. I mean, it bounced off lows, but this was pretty sharp.
Yeah, it was down more than 10% at one point.
It was down more than 10%. It got to 9-month lows. You can see how the relative strength line, which was actually getting close to highs or certainly consolidation highs, has really broken down. It was a leader, but sometimes leaders or quasi leaders can then break down, out in the context. And I would look at all these big, heavy selling days and a number of other days that were above average. There's really not much on the upside. So that shows you just how much selling is going on. I mean, growth has been weak. EVs have been weak. Generally, there's a lot of company-specific news, the Twitter deal, Tesla Shanghai issues. There may be increased competition from BYD. There's some more negative news about autopilot. It doesn't really matter what you think of that news, what I think of that news, or even what's specifically driving it. You can just look at this chart and know something is wrong.
Mhm. And it was interesting because Tesla was certainly holding up a lot better than a lot of the automakers. I mean, you just
Oh,
compare it to like,
absolutely.
Ford and so on, which are down more than 50%. But Tesla seems like it's quickly accelerating to join them in that below 50% level off of its highs. So maybe switching back to the weekly for a lot of people, they might be looking at this chart and saying, well, gosh, Tesla's up so much, it's such a great company and everything like that. But I guess part of this depends on where you bought it. I have bought this a number of times and sold it along the way, sometimes way too early. But this last purchase I did was in 2021, as it was kind of coming up at the bottom of that cup. And then I sold, I think my last share is at around 1,000. So for people that have been holding on to this for longer, I suppose you could make an argument that, if you looked at the monthly chart, that you're not giving back too much of the gains. But if you bought this anytime in the last few months, certainly, or even from that consolidation before, it just seems like how could you hold on to this?
Yeah, and even here you're giving up a lot of gains. So it
Right.
seems
Hmm.
like you'd almost would have wanted to buy somewhere. If you bought it here, okay, or if you bought it earlier, then you can. You didn't have to. You don't have to hold it. This is a
Right.
judgment call. I mean, I know you and I are the type to sell. We'll take our singles or doubles.
Hmm.
We're not going necessarily, we don't necessarily have the conviction on stocks to hold through that. And that's fine. If you're the type, we do have people on staff who have held Tesla and they held it through some big sellers, some
Hmm.
big losses, and benefited from that. And so they're still holding. But you do want to draw a line in the sand, decide, well, when would you want to get out? Because some winners will just collapse entirely and just keep on falling, falling, falling. That doesn't mean Tesla's going to. It might stop here and go higher, but you do want to eventually have what works for you, what your selling strategy will be.
Yeah, good advice. And speaking of which, here we are. We're faced with another potential rally based on just the Friday close here. What should investors be looking at right now and for the coming week?
I think, just like this is not a time to be brave or try to be
Mhm.
cute. It's a time to be smart and manage risk. It's just not, you're not going to get away with things in this kind of market. I mean, look, if you try to call the bottom, you'll eventually get it right, but you'll do it 20 times and you'll be so beat up at that point. Really you need, except for maybe a long-term winner like Tesla or something like that, is that you have huge gains in, or maybe if you're in an energy stock that you're up a decent amount, you can choose to hold those. You don't have to, but you can. But otherwise, it just seems like be on the sideline, maybe do some research, maybe, or at least listen to Justin's research on bear markets, and market corrections, maybe the ones from the 70s, the late 60s to the early 80s when we had a lot of inflation, that kind of environment, and work on your watch list. I mean, and if you didn't change your watch list during this week, you've got some work to redo things because there's a lot of stocks that looked good a week ago, like Dollar Tree,
Right.
that are just gone,
And the
that we
food
may not see
stocks.
them for years. Food stocks. There's a
Right.
lot of stocks that you would have thought these are safe.
Yeah.
These you can be comfortable with, and then they just are blown up. So that's another reason why you don't want to jump into things ahead of time, because you just don't know if things are just going to. The risk is extremely high. The reward is low, to be honest, and that's just not an environment you want to be playing in.
Yes. Well, great advice, Ed. Thank you for so much of that analysis. And of course, for those that want to see more of Ed, you can catch him as well as myself on IBD Live every morning. We start 10 minutes before the market open. That's 9:20 Eastern Time, 6:20 Pacific Time, and we go for about an hour and a half. Of course, you can always catch us here on Stock Market Today. Never fear, Allie will be back on Monday. If you miss her that much, you can also check out her YouTube channel. So you can, she's got a lot of video content there, sharing not only her investing knowledge, but also just some personal stuff. You get to see her dog Jojo, so that's something to check out. You can also check out my podcast. We dropped a podcast with Andrew Channon this week, talking about UFOs, Ukraine, and the future of space. So lots of stuff to keep yourself busy, even if the market is something that's not as enticing right now. But thanks for joining us today. Hope you'll all have a great weekend, and we'll see you on Monday.